Ladies and gentlemen, good morning. Welcome to HansaMatrix Investor Webinar. Today we are hosted by the CEO of HansaMatrix, Ilmārs Osmanis, and CFO Māris Macijevskis. As always, we will start with company's presentation, which will be followed by questions and answers session. Therefore, you are kindly invited to participate by typing your questions in the questions box, which can be found in the settings panel zone. Ilmār, Māri, I invite you to start the presentation.
Good morning, everyone who joined our early morning presentation. And thank you for participation. So HansaMatrix, innovator in manufacturing solutions, high-tech group, presenting Q2 results and Q2 and 6-month results of 2020. Presenters are myself, Ilmārs Osmanis, CEO, and Māris Macijevskis, CFO. We will change speaker during presentation. So, executive summary: 2020 6-month business trends. Basically changes. What are changes? Of course, everything happens under COVID-19 umbrella almost. What's currently critical important for us? Personal safety issues. We have to, during Q2 and 6 months, we really had to concentrate on really getting our workers healthy, or staying healthy, more or less, being able to continue to operate plants where you have quite concentration of employees doing production process. And this remains, it was important and remains important. Good result of the first 6 months are that we haven't had any single infection case per company. We want to stay like that for next periods. Of course, supply chain disruptions that have been very heavy in the beginning of the period, like February, March. Been some of the problems been improved or solved. Still, there are transportation network disruptions, and impact will continue. However, it's reducing. Third trend: new telecom, data router base station production influence with supply chain and transportation logistic disruptions starting to experience demand growth. So we are going forward. We see that we are able to increase production of those products despite supply chain and transportation logic disruptions. Also, we see that it's very beginning, but the new megatrend starts, so-called nearshoring, switching production from Asia to East Europe for Europe critical supply products. That would be trends for the period. Or for this moment, really. Summary of Q2. In 2020 Q2, we reached revenue 5.29 million, which is in 11% drop from last year. TTM at 23.2 million. EBITDA value also went down by 45% and went to 0.527, and which is 45% decrease last year. EBITDA margin also went to around 10%. So net profit been a negative 3.38 million. So fact is extra costs that actually contributed to these figures are actually our decision keep workers. We thought that period should not be too long, and we were true. So since June, revenues are growing, and we need all people. And even now, in a period after Q2 or beginning of Q3, we starting actually to recruit to provide required employees for next periods. So this was deliberate decision to keep staff, and also, of course, we had extra costs due to all requirements, self-isolation. So we kind of have kept 20 people all full period, like been paid but at home. Comparison with peers. As we can see, it's not been, some of businesses reported quite nice figures on revenue side and EBITDA side. However, we still with our 9.9 are on the second position among our comparable peers, according to August 24. Not all of results are 100% comparable. There is some shift by quarters here on some of the figures on other companies. But nevertheless, HansaMatrix has quite low 3.9 multiple to EBITDA, comparable to 11 for large ones. So basically we are. Table says 2.6 even. No, it doesn't say. What's the 3.9? Okay, so let's go further. Mari, now it's your turn. Q2 details.
Yeah, thank you, Ilmārs. Hello, everyone. Māris here. So starting with results in detail. So in Q2 of 2020, the company revenue amounted to 5.3 million, which is a 11% year-on-year decrease, but a 2% increase as compared to the first quarter of 2020. And the decrease in revenue was influenced by COVID-19 situation and challenges both in supply of components necessary for production and in postponement of orders for some customers. However, in Q2, there were already positive signs in the revenue recovery in June, when sales reached 2.2 million, indicating certain improvements in business environment. So going further, in second quarter of 2020, three main regions to which we provided manufacturing services were Baltic states with 35% of total, Nordic countries 25% of total, and the rest of EU countries 29% of total. Services provided to the companies outside the EU this quarter were 11% of total. Well, this quarter, the revenue on year-on-year basis decreased in Nordics, the rest of EU, and in the Baltics, but revenues outside the EU increased significantly, which is explained by the long-term manufacturing contract execution signed back in 2018 with an international customer in industrial segment. And then revenue by market sector in Q2 of 2020, two main sectors were data networks products with 41% of total and industrial with 49% of total, and all the other sectors were comparably small, ranging from 2 to 4% of total. And also due to COVID, most of the sectors decreased on year-on-year basis, except for the industrial segment, where explanation basically is the same. The increase is due to this long-term manufacturing contract with industrial client, which contributed to industrial segment. Next, quarterly profitability. So the EBITDA result achieved was 527,000, which is a 45% down on a year-on-year basis. However, it's a improvement as compared to the first quarter of this year. This quarter we operated with net loss of 383,000 euros, and EBITDA margin was around 10%. So the revenue volume and profitability was influenced by supply chain disruptions and postponement of orders in some sectors. Next, results of 6 months. In 6 months, the revenue achieved amounted to 10.4 million, which is a 12% year-on-year decrease. Which was also as a quarterly revenue was influenced by COVID-19 situation and challenges in supply of components necessary for production and in postponement of orders. So regions in sales to regions in 6 months, Baltic was 42% of total, Nordics 26% of total, and the rest of EU 23%, and outside EU 9%, with most of the region's revenues decreasing on a year-on-year basis, except for the outside EU sales, which has increased quite significantly. Then sales by sectors in 6 months. Sales by sectors are dominated by data networks and industrial products with 41% and 43% of total. Other sectors were comparably small in 6 months, and most of the sector revenues decreased, except for the industrial segment, where 3% growth was observed. So profitability in 6 months. In 6 months, EBITDA amounts to 970,000 euro, which is a 53% decrease compared to 6 months period of 2019. Net loss result was 800,000 euro, and EBITDA margin achieved was 9.2%. The profitability in 6 months was, again, need to say, influenced by COVID-19 situation and disruptions related to supply chain and postponement of orders. Then trailing 12 months results for the TTM period ending in the second quarter of this year. Company achieved 23.2 million revenue, which is 6% up as compared to the TTM revenues reported 1 year ago. EBITDA for the last 12 months amounted to 2.6 million, which is 23% down compared to the TTM sales result of second quarter of last year. And the company finished the last 12 months with 11.3 EBITDA margin and net loss of 760,000 euro. So now I give floor back to Ilmārs.
Yeah, thank you, Māris. Let's go to look at other areas of business. R&D revenue for Q2. R&D revenue reported was 0.17 million euros, 70% decrease. And in those figures, it's about 3.3% share in quarterly consolidated shares. This was again caused by really a company switch to cash saving mode, and also some of the income that was attributed to these high-tech companies that were buying services. They reduced or postponed some purchases during the first half of year. Everything is kind of back in Q3, so we'll see increase here in the next quarter. R&D revenue reported was 1 point. So that's probably 6 months. I think this is a mistake here. Oh, that's 12 months. 12 months TTM across 12-month period, ending with Q2. It's reporting 1.911 million euros, which is 5% decrease year to year, due to last quarter small result. 8.2 share per that period. Consolidating revenue. Of course, R&D revenues are not influenced by supply chain, and some of customers postpone orders. That's true. Second is a true factor. So investments during Q2 and 6 months. Of course, figures that we are reporting they're small comparison to normal year. And this is explaining only the fact that cash was the issue. We really only did must investments, not to stop production, so to maintain manufacturing equipment and other assets. I think that's not much to tell. Investment in associated companies, subsidiaries in Q2 and 6 months. So actually investments were reduced also in all other parts. In Lightspace Technologies investments, as you can see in Q2, is 108,000 euros only. So they've been really suspended, and also and overall on the 4.73 million euros and for 6-month period. As of end of 2020 Q2. Overall investments in all forms, equity, convertible loans, and bridge loan reached 8.643 million euros. Zinātnes Parks, small 40,000 investment in Q2 and 133 million investment in 6-month period. Informal convertible loan just for main project development. And total invested amount amounted to 1.758. Just want to tell here that we have started also look into possibility maybe to divest this the investment, and because that's kind of currently after starting Rail Baltic building, this is only available land plot next to Riga airport station. So we think the value could be quite good to realize this. Business development of Lightspace Technologies. Besides other things being told on previous webinars, most important fact here is that on July 28, Lightspace Technologies has signed grant agreement European Commission to receive grant funding of 2.25 million euros for European Horizon 2020 Research Innovation Program. So I would say that's kind of allows us to go ahead with the product development for market, and also helps HansaMatrix Group to continue all the main activities. We decided to provide for you forecast for year 2020 that we've not been doing before. First of all, COVID-19 update. It's new normal. We have to accept that. It's not going away, it's continuing. Supply chain disruptions continue despite fact that some of their really bad disruptions really been solved. However, still we cannot say that transportation is back to what used to be before COVID, especially meaning here Asia, Europe. Also within Europe, transportation becomes slower. However, a company has adapted to new normal and taken consideration risks related to supply chain and all transportation networks. What we are seeing that changes that started due to COVID actually might stay longer than COVID. And it's not only negative, it's also positive changes because COVID-19 have caused increase of demand for new telecom segment, all products in that segment, base stations and data networks. And to that extent that we are right now making new investment projects to increase capacity. We are going further with increase supplying demand. We could very soon hit our 100% capacity limit. So we did decision to kind of expand capacity within next 3 to 6 months. Current management guidance for whole year 2020 revenue, we believe that will be at level 23-24 million euro, where like missing is will be expecting improvements in Q3, Q4 to fill the gap. and with the potential maybe to end year similar as year before, 219. That's kind of our official forecast for this year. However, still you have to realize that still there are COVID-19's related transportation network and other problems are out there. So that's finishes or completes our main part of presentation. Your questions, answers are welcome now. And yeah, we're finishing this. There are some questions.
Ilmār and Māri, thank you for the presentation. Yes, as now I will proceed with the questions, but before, reminder to those who haven't yet submitted their questions, you can do it in the questions section in the settings panel zone. But the first question is, why Baltic sales were especially hit in second quarter? Can you please elaborate more on that?
Yeah, I'm going to answer those. So these are submitted before, so we are able to put them in a slide. So basically here we have to realize that otherwise it would be similar, figure would be similar to others, but we have special politics, business policy in Baltics that we are working with. We are working with more startups than from other regions. And here we had several startups which otherwise was very good in developing their business. However, they were quite hit by the COVID. So with several of our customers have just postponed orders and put on hold their supply of products to the markets. So that kind of explains maybe this extra percent that we see in Baltics. Yeah, we are deeply involved in more segments of customers here. And maybe the second question, could you describe what is the current situation regarding demand, logistics, supply chain? I believe we addressed that on a forecast and event slide. But if there is anything which you want particular answer, please put these more precise, more focused questions into our questionnaire, question part right now.
Okay, thank you, Ilmār. So the first questions have arrived from the audience. How far is Lightspace with the product design of new 3D headset? Is it going to be completed by end of 2020?
Yes. Yeah, this is ongoing process. What we know fully know, answer is no. Plan was to have it completed maybe in Q1 2021 originally. The problem here appears are a little bit similar on supply chain side. We are using several optical element like lens, prism, and kind of other micro display suppliers, and they come from Asia, and kind of response time actually is substantially slower than it used to be before the virus situation started. So we are going at a fastest pace. We will have 2 rounds of prototypes in autumn, in fall, like maybe next round will be November. However, market ready prototypes we expect to have in February next year. So it's slightly further down the road, like 3-4 months.
For which period is the European Commission grant funding of 2.25 million euros intended to be received?
Let's clarify. We Lightspace have received grant, which is 2.25 million, which is Horizon grant funding, and it's been signed. It's to be received across 2 years. However, you can speed up the process, and if it makes sense, you can increase your pace of the project. but generally it's up to 2 years, up to 24 months, starting with 1st of July 2020.
Okay, thank you. The next question: when do you expect to sign the EYC fund investment of 1.7 million euros, and what stake could be sold to the fund for that money, and what would be the value of Lightspace for this deal?
Yeah, yes, that's a fair question. We are still in a process of preparation of this deal, which is connected to the grant. Grant was signed 28th of July, as already we noticed. We sent notice. This is still in process. This is new instrument, and this is European Investment Bank who manages that, which means that's not going very fast. We expect to sign it before end of year. However, it's not something that you can rely on. But anyway, during next 6 months from counting from July, so it could be January, but about this period. Stake, as I have read basic terms, this has been European IEC fund does not define value of investment, so they provide this investment in form of convertible or bridge loan, which is connected, or if you have any a private investor coming the same time, you can match that. So they match any private third-party investor valuation whenever that happens. So at this point, we cannot say what it will be.
What are the most promising products in terms of profitability in the future?
Let's say HansaMatrix in HansaMatrix strategically are focusing in high complexity product manufacturing. We believe these are the more profitable products rather to have simple, very basic products in electronics. That doesn't require too much knowledge, too much effort, too much quality system, and also investments to that. So we are focusing on those products who require investment in machinery, who require high precision, high quality demands on products as well. So normally those come from all kind of professional sectors, including medicine, including aerospace defense, including also some maybe optical devices. These are the directions we are specifically focusing for future development. So our interest or our intention is to go into those high complexity products, and those historically already demonstrating that they provide higher profitability rather than very simple high volume production.
Thank you. All questions are now answered, and recording of the webinar will be available in the Nasdaq Baltic YouTube channel and in company's announcements. Gentlemen, thank you for the presentation and for answers given. Participants, thank you for joining.
Yeah, thank you for everyone who is listening to us and everyone who will listen to us. So have a good day, and thank you, Māris, and Nasdaq. Thank you. Bye.
Until next time.